in this explainer, we're documenting a method called market DNA. And we're going to do that by looking at a specific case study involving the US100 index. So let's dive right in. So, market DNA is a proprietary geometric system. For our purposes today, we're just going to narrate exactly what we see in the materials provided. Think of this as a step-by-step documentation of the process. Here's a quick look at our roadmap. We'll start by introducing the method itself. Then we'll walk through the current situation, which is phase 1. After that, we'll get into risk management and the potential targets. And finally, we'll define what could happen next and cover some really important disclaimers. All right, so our focus is on Cycle 5 for the US100 index. And as of March 9th, 2026, the system is officially in Phase 1. That's our starting point for this whole visual record. Now, let's dig into the heart of this case study. Phase 1, the initial setup. This is all about the current state of the market, at least according to the market DNA model. Okay, so what you're looking at here is the system's geometric structure laid over the US100 price chart. You can see the prices just touch that line labeled M. That specific event is what kicks off Phase 1 for this cycle. Now, inside Phase 1, the system actually defines two different entry levels. The first one, the primary entry, is M at 24,244.2. But there's also a secondary level, PC, down at 23,680.9. And it's really important to know that PC is just an optional secondary entry within Phase 1. It's not a whole new phase. Next up, let's take a peek at the risk management side of things. We're going to run through a hypothetical scenario just to see how the parameters get calculated. The very first piece of the puzzle for our risk calculation is time. For this particular cycle, that shape on the screen, the trapezoid, defines a time duration of 61 days. The second key ingredient comes from something labeled the third triangle domain. Its value is 5.44%. This is another really crucial input for the risk model. And the third parameter we need is the risk coefficient. For this specific calculation, that coefficient is set to 1. So those three things, they're the foundation for what comes next. This table shows us how those inputs all come together. We start with a hypothetical $100,000 in capital and say the max allowed drawdown is 5%. The system then uses the mean entry price to calculate an expected low. All of that math leads to a total position size of 0.38. But since there are two potential entries, that gets split, making each trade size 0.19. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. Okay, so now that we have a sense of the risk parameters, let's look at the other side, the potential outcomes. This next section outlines the three distinct price targets that are identified here in Phase 1. Here they are, the three sequential targets. Target 1, or T1, is defined as the price making contact with the mirror line or the lower trapezoid boundary. Target 2, T2, is up at the geometric point labeled apex N. And finally, target 3, or T3, is way up at the top of the trapezoid, which represents the full exit point. So let's play out a possible outcome. In scenario 1, let's say only the primary entry at M gets triggered. If that single position is held all the way to the final target, T3, the expected total profit would be $2,305. Annually, that translates to a return of about 13.76%. But what about scenario 2? This is what could happen if both the M and the PC entries are triggered. In this case, with different exits for each trade, the combined expected profit jumps to $4,623. That projects out to an expected annual return of 27.64%. So, you might be wondering what happens after Phase 1. This next part introduces the definitions for the phases that could potentially follow. This is the path forward. Phase 2 is defined by a simple visual event. It happens if, and only if, the price makes observable contact with the mirror delay line or the lower boundary of the trapezoid. That's it. It's based purely on observation. Phase 3 is also tied to a very specific price achievement. It's triggered the moment the price reaches that geometric point we saw earlier, the one labeled apex N of triangle 3. And that brings us to the final phase, Phase 4, which marks the completion of the cycle. This happens when the price reaches the top boundary of the trapezoid. Once that happens, the cycle is considered done, and a full performance summary is generated. Now, here is a really crucial point. The sequence of these future phases isn't actually set in stone. The system could follow what's called a normal path, going from phase 1 to 2, then 3 and 4. Or it could follow an alternative path, where phase 3 happens before phase 2.
All right, before we wrap things up, we absolutely have to go through some important notices. This is a mandatory part of the documentation process, so let's pay close attention.
First and foremost, this is not financial advice. Everything we've shown is for documentation and public verification purposes only. Any risk management decisions must follow the individual user's own instructions. Also, according to this method, leverage above 10 is prohibited. And of course, you should never, ever invest essential personal funds.
And that's where we stand at the end of this initial documentation. The system is in phase 1, and what happens next is still an open book. The big question this case study is waiting to answer is, which event will we see next? Will it be the mirror contact of phase 2 or the end-level event of phase 3? We'll just have to wait and document what happens. Thanks for watching.